Bitcoin might actually hit $700,000 per Bitcoin. And if this sounds crazy, I get it. But this isn't coming from me or some random guy on Twitter. This came straight from Larry Fink. He's the CEO of BlackRock, the biggest asset manager on the planet. And he's not the only one. Cathie Wood from ARK Invest is calling for the same thing, $700,000. And these are people who manage trillions. They're not guessing. They see things that the rest of us don't. And in this video, I'm going to break down why they're making this call. And more importantly, what it could mean for you if they're only halfway right. Now, let's dive in. BlackRock just predicted $700,000 per Bitcoin. What do they know that you don't? Here, I recently stumbled upon this thread on X. And it says, 2025 Bitcoin price predictions have been rolling in and they're staggering. These are not coming from influencers, but from banks, hedge funds, and asset allocators. So why is it important to emphasize that these are not coming from influencers? Because influencers within the crypto space have a really bad reputation because they oftentimes recommend projects. They're shilling their own projects. They're pumping their own bags at the expense of other people. And then afterwards, they're just dumping it on them and cashing out their position. So influencers don't really have a great reputation. On the other hand, banks, hedge funds, and those asset allocators, they are like the poster childs of the traditional financial system. So the fact that they're coming out with these price predictions, yeah, it's quite interesting. He's saying, I take these with a grain of salt, but interesting nonetheless. And I do too. I want to be clear. In this video, we're going to talk about price predictions. However, nobody has a glass ball. Nobody can see into the future. And anyone that claims that they can or promises you that they have all the answers, they're simply lying. But what we can do is we can make an estimate. I call it a guesstimate because you're always guessing based on certain assumptions that you make on the market or about the market. And based on that guesstimate, you can make your own game plan. Mostly how you're going to enter the market and how you're going to exit the market. So let's talk about some of those price predictions. So Standard Chartered, they say in 2025 Bitcoin will hit $200,000 price target. H.C. Wainwright is saying $225,000 per Bitcoin. Sina from 21st Capital, he is aiming somewhere between $135,000 to $285,000. Larry Fink is saying $700,000. Fundstrat, Tom Lee. So Fundstrat is basically a company which is providing investment research to large hedge funds. And their leader is Tom Lee, or their founder is Tom Lee. And he often comes on a lot of these talk shows or media outlets, and he often shares his perspective on the market, his perspective on Bitcoin, and his investment thesis. So he believes Bitcoin can go to $250,000 in this cycle. Anthony Pompliano, which is a well-known figure within the crypto space. He's been very vocal about Bitcoin for many years. He's like quite the household name. 𝗗𝗶𝘀𝗰𝗹𝗶𝗺, which is an early Facebook employee, later on became a VC, and now he's a billionaire and he's managing a fund and he's making a lot of investments and he's very outspoken as well. Van Eck, which is a large asset manager, they're predicting that Bitcoin can go to somewhere around $180,000. 10x Research, $122,000. GFO X Survey thinks somewhere around $150,000. And all of these players have their own core thesis. For example, Standard Chartered believes that Bitcoin can go to this price because of a hedge against all of the macroeconomic events that are happening, geopolitical uncertainty, money printing, and most importantly, institutions buying into the market. And here you see all of these breakdowns of what made them come up with these price predictions. Now, let's uncover a few of those price predictions. And this is the person that brought us this this breakdown. So Alec from Swan Bitcoin. So, all right. Larry Fink, CEO of BlackRock. He predicts a $700,000 Bitcoin price prediction amid inflation worries. Now, his thesis kind of makes sense because within our world, within our economy, we are dealing with central banks which consistently print more money. Every time a government has a gap in their balance sheet, they need to borrow more money. Oftentimes, this money gets printed out of thin air. Every time a war gets waged, then again, oftentimes money needs to be printed in order to cover the expenses of that war. And with all of that money printing and all of the economic uncertainty right now, and the gaps in government's balance sheets, and not only in the United States, but also in Europe. China's printing so much money right now. Literally, if you look at the charts of global M2, which is the global money supply, which is basically the sum of all of the money supplies around the world. So in Europe, in the United States, in Canada, in Japan, in the UK. Like if you add up all of the money in the world, that money supply is constantly expanding. And with more money entering circulation, it generally means that every unit of money slowly becomes worthless over time. And smart individuals and corporations and institutions want to hedge themselves against the devaluing of their currency. So what they do is they find really great stores of value. And so far, Bitcoin has proven to be a really great store of value. It was in fact the best performing asset class of the past decade because it generated 230% annualized returns between 2010 and 2020. And it still seems to show a very strong financial track record. And that's why it's attracting many players into the market right now. We're seeing a massive inflow of capital into Bitcoin. And Larry Fink is one of the most powerful men on this planet. Why? Because he, or BlackRock, the company that he manages, has large stakes in many corporations. He talks to many government leaders and to many other influential leaders. So you need to understand, Larry Fink plays this game from a different perspective. He looks at the world from a helicopter view. He knows how the flows of money, power, how everything ripples throughout the world. He sees it. He sees it with his own eyes because he's in contact with all of these large players on a daily basis. He meets with them in Davos. He meets with them on other very big, important occasions. For example, Larry Fink recently went to Saudi Arabia with Donald Trump. And he did a whole tour around the Middle East and spoke to many political leaders. So this guy is in the trenches. He knows what he's talking about. So when he says something, of course, he has a financial incentive to do so because they make a lot of fees by selling his Bitcoin spot ETF. But yeah, you should listen when Larry Fink is talking. Then let's talk about 𝗗𝗶𝘀𝗰𝗹 from ARK Invest, another large asset manager. So ARK Invest CEO 𝗗𝗶𝘀𝗰𝗹 doubles down on Bitcoin price prediction. And they say their base case target, so their base case target for Bitcoin remains $700,000. Interesting. So we've just discussed Larry Fink from BlackRock and 𝗗𝗶𝘀𝗰𝗹 from ARK Invest. Let's see what other big names in the industry are saying. So we already covered this table, but let's briefly uncover why they are making these price predictions. Yeah, so here is another article. Bitcoin could hit $200,000 in 2025 as an analyst sees macro trends aligning. So Bitcoin's path to $200,000 in 2025 is fueled by ETFs, institutional demand, and macroeconomic shifts, with analysts warning of volatility amidst transformative growth. So of course, clearly the biggest thing that is pumping money into Bitcoin right now are the institutions. Okay, since last year, Q1 last year, Bitcoin spot ETFs were approved, and basically the gap between the traditional financial markets and the new world of crypto was bridged. Because now with a few clicks of a button, people, corporations and institutions could get exposure to Bitcoin through the stock market by buying one of those ETFs. Here, another article on Bitcoin.com. One of America's oldest investment banks sees Bitcoin soaring to $225,000. So here, H.C. Wainwright and Co. an analyst from H.C. Wainwright & Co., one of America's most established financial institutions, anticipates an accelerating year for Bitcoin driven by clear regulations and enhanced institutional involvement. That's also something that's super important because in the prior years, the crypto industry had a cloud of uncertainty hanging around it because the previous administration was attacking the crypto industry. They weren't really coming out with any clear laws and regulations, and they were attacking crypto companies left and right. And now with the Trump administration, we are seeing a lot more clarity. The crypto industry is finally getting the attention that it deserves from policymakers and other large players that are needed to turn this into a thriving industry. So this analyst is saying because now we're seeing a shift from regulatory uncertainty to regulatory clarity, we're now seeing that more and more players are feeling comfortable to invest in Bitcoin. And that's why they believe that Bitcoin can actually go to $225,000 per Bitcoin. Now let's talk about the quantile model. So the quantile model, that is right now, some say, the most accurate predictive model that we have available. So of course we also have the stock to flow model created by Plan B, a Dutch institutional investor, which looked at the available the already mined Bitcoin versus the new Bitcoin that's being mined every single day, and the ratio between those two and how that impacts the price of Bitcoin over time. And the stock to flow model has been a really accurate model for many years. However, some say that in the previous cycle it was it was invalidated. And that's why people tried to search for a new model. And this model is called the quantile model. And I made a few videos about this on my YouTube channel as well. The quantile model basically imported all of the data points about Bitcoin's price, and it made a statistical model of all of these previous price movements. Based on those price movements, how likely it will reach a certain price in this cycle. And that's what we call a quantile model. And this quantile model is predicting a Bitcoin price between 135,000 and 285,000. I believe that's quite a big range, but still it gives you sort of an indicator of where we could go. Hopefully towards the upper bound of this range, but either way, even if it's the upper bound or the lower bound, those are some nice numbers. Then, of course, Fundstrat Tom Lee, he believes that Bitcoin could hit $250,000 in 2025, citing bullish market trends. Probably this has to do with the fact that in economics, everything is determined by supply and demand, and we're seeing a shrinking supply because less and less players are willing to sell their Bitcoin. Sellers are exhausted, and the ones who sold their Bitcoin got basically acquired by larger players which have a longer term horizon and which aren't really looking at selling on the short term. So we have a shrinking available supply. At the same time, demand is increasing over time, and generally this means that the price of something will go up over the long term. So based on those dynamics, Fundstrat Tom Lee is predicting that Bitcoin will go to $250,000 per Bitcoin. Anthony Pompliano highlights Bitcoin's price surge. ETF demand outpaces supply. Yeah, this is something that you can actually verify real life on the blockchain. Let's see if I added a chart. No. So every single day, Bitcoin miners are processing transactions on the Bitcoin blockchain, and as a reward for processing those transactions, they earn Bitcoin. We call those block rewards. And the new Bitcoin that's being released to the miners is way smaller than the amount of Bitcoin that is currently bought up on a daily basis on the open market. So more supply is taken off the market than new supply is added to the market. And that generally means that we are preparing for a massive supply crunch, that's how we call it, that will result in a bidding war for Bitcoin, which will drive up its price. So that is the investment thesis of Anthony Pompliano. and many others, to be honest, within the crypto space that believe exactly that. Bitcoin's next leap points to $500,000 per Bitcoin. Here's when and how. So 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗵, a well-known billionaire investor, has joined the dialogue about the future Bitcoin halving events and their implications for the asset long term. This comes down to the fact that Bitcoin is becoming more scarce over time. Every 4 years we have the Bitcoin halvings, meaning that the new supply that's being released to the Bitcoin miners is becoming more scarce over time. And when something is becoming more scarce, then and the demand keeps on increasing, then generally it means that the price of it will go up as well. It's simple first principles thinking. What is first principles thinking? It's when you boil something down to the most simple understanding that you can have without any buzzwords, technical jargon, because economics is all just a matter of finding equilibrium between supply and demand. And if there's less supply and more demand, then people must be willing to pay a higher price to do so. Let's talk about VanEck. So VanEck is a massive asset manager out there. So VanEck is saying that they predict an institutional tsunami which may drive Bitcoin to $180,000 within a year. And this institutional tsunami, we're already seeing it. Think about all of the Bitcoin acquisition vehicles which have recently been created. 21 Capital, MicroStrategy, Meta Planet, Nakamoto HQ. So these are just 4 Bitcoin acquisition vehicles which are pure play. Not pure play, because MicroStrategy also has some other business units, but these are mainly Bitcoin acquisition vehicles. And there's many other corporations out there which are acquiring Bitcoin for their Bitcoin treasury reserves. The UAE also recently came out that they have invested $500 billion or million, I'm not sure, maybe it's million, into MicroStrategy. So governments are buying, institutions are buying, corporations are buying, and they are sitting on hundreds of millions, billions, which will flow into the market in the next few months, especially when the real FOMO starts to kick in. Because I feel like we haven't really seen real FOMO in the market so far. Whenever I go to my barber or talk to my friends or my family members, they're not really talking about Bitcoin yet. We don't see any stickers on buses, on metros. So I personally believe that the FOMO hasn't kicked in yet. But when it does, we're going to see a massive inflow, even bigger inflow than we're already seeing right now. Hey guys, real quick, before we continue this video, if you enjoy watching videos like this one, do me one quick favor, smash the like button, subscribe to this channel, because I'm going to be posting regular videos just like this one to help you to maximize your profits and to help you to understand everything that's going on. Now let's continue. So here is another article. Bitcoin could hit $122,000 by February before consolidation. Well, we're already past February. We didn't hit $122,000, but we have to say, so this article was launched more than 3 months ago, and that was probably right before Trump came out with Liberation Day, and the market got spooked because of the uncertainty that it created. If that didn't happen, we might have already hit that price level. But from here onwards, going to $122,000 per Bitcoin, I think that's easy. That would just be a small 20% gain. And in the world of crypto, in the world of Bitcoin, a 20% pump is nothing. That could happen in just a matter of a week. So we just need a small spark of news, a small spark of hopium, and we could already be there. So I personally believe that this price target is way, 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 way too low. Sentiment data reveals a surge in retail bullish sentiment and whale activity. Can Bitcoin reach 100,000 or 150,000? So yeah, I believe this. This was a recent article which got published by blockchain.news. And this has to do with sentiment. So Bitcoin or crypto as an asset class in general is one of the most emotional markets out there. Why? Because crypto is mainly, or used to be mainly, a retail market, meaning that the average person like you and me invest with our savings into this asset. There weren't really any large institutions, there was no Wall Street, there were no banks. And what do retail investors do? They get very emotional. When the market goes up, they feel good, they want to buy more. When the market goes down on a red day, they feel like they messed up, they're panicking, they believe everything could go to zero because they didn't do their research, they're not experienced, they haven't gone through cycles of investing yet, so they panic and it becomes a cascading effect down. So you see these very aggressive moves up and down, which is driven mainly by emotions and sentiment. Now we're seeing an improved sentiment, so the market went from fearful to being greedy, but not extreme greed yet. So if you factor in that we haven't seen extreme greed yet, so when we enter extreme greed, then we might see that extra pump to $150,000. Who knows? So how does all of this actually lead to a $700,000 Bitcoin? So we've discussed some of those other price predictions. Let's go back to Larry Fink's price prediction. Let's talk about portfolio allocation. When you are talking to a financial advisor, oftentimes they will generate a model portfolio for you. They will say, based on the available capital that you have, based on how many years you still have left until retirement, based on your risk appetite, we recommend this model portfolio to you. And these model portfolios will probably include some ETFs, some gold, some bonds, and maybe some other types of investments. And Larry Fink is saying that if these model portfolios are also going to start allocating Bitcoin to those model portfolios, and let's say that the average portfolio allocates just 2 to 5% of their capital to Bitcoin, then we're already at a $700,000 Bitcoin. So we're not only talking about individuals, we're also talking about institutions. So keep in mind, institutions are managing billions and even trillions. So 2 to 5% of the assets that they are managing, those are very significant chunks of money. And if that flows into Bitcoin, we're going to see a very significant increase. So this is actually a chart, I believe by BlackRock or ARK Invest. But the question is, what would be the impact of an optimal allocation to Bitcoin? So there's around $250 trillion of global investable assets. And what if just a small percentage of that will go into Bitcoin? Well, with a 1% allocation, we will probably see a Bitcoin of somewhere around $120,000. That's where we are already at. But what if we see a 4.8% average allocation? Then Bitcoin is somewhere at $550,000 per Bitcoin. And what if we see a 20% allocation? I do believe that's quite high, but then we'll see a $2.3 million Bitcoin. So yeah, those are just some calculations based on different portfolio allocations. But keep in mind, BlackRock, their most successful ETF in history was the Bitcoin spot ETF. That was their fastest growing ETF to hit $40 billion under management. On the other hand, it took BlackRock's gold ETF more than 20 years to reach $33 billion of assets under management. So yeah, here you see the chart. So what took their gold ETF more than 20 years took their Bitcoin ETF less than a year. And that shows how much demand there is right now for Bitcoin. So if you are hearing these allocations, then it actually might not be that unrealistic, because there's so much demand for Bitcoin right now, which is validated by these Bitcoin spot ETFs. Here, a tweet by the Bitcoin therapist, CEO of ARK Invest, Cathie Wood, doubles down on her 2030 Bitcoin price predictions. So base case, $700,000 per Bitcoin. Bull case, 1.4 or $1.5 million per Bitcoin. Well, nice. I really hope that those predictions will come to fruition. And yeah, all of that has to do with just the scarce supply. There will only ever be 21 million Bitcoin that will ever be in circulation. At the same time, more money can be printed, more houses can be built, more stocks can be issued, more bonds can be issued, but you cannot create more than 21 million Bitcoin, and it will take more than 100 years for the final Bitcoin to be mined. So that Bitcoin is currently held mostly by individuals, and we're seeing an increasing exposure to Bitcoin in the categories of companies and ETFs and Bitcoin miners. So those are right now the institutions which are swallowing up the largest chunk of the Bitcoin supply. So we're probably going to see in 1 year from now, maybe after this bull market, we're going to probably see that institutions, meaning companies, ETFs, and miners, will probably own a much bigger chunk of the Bitcoin supply. But let's zoom out now for a second, because Bitcoin was made exactly for the world that we're seeing right now. Money printing, macroeconomic uncertainty, low trust in governments, low trust in media, in general, just low trust, because Bitcoin gives you back the full control over your financial future without having to ask for permissions to your government, to your banks. So the economies right now, they were stalling. In the US, they predicted negative GDP growth, meaning that the economy is actually shrinking. So money printers are warming up. The money supply is already going up. And this means it's Bitcoin's time to shine, because when money printers are on, it means money is devaluing, and it means that people are searching for ways to hedge themselves against that devaluation. So Bitcoin offers that solution. And here you see over time, so from 2010 to 2024, $1 invested in Bitcoin. So you see, yes, it is very volatile, meaning that there's big swings up and down. But if you zoom out, you see that the longer term trajectory of Bitcoin is up to the right, to the top right corner. And if we take $1 invested in gold, then you see you barely see any significant increase compared to Bitcoin. So Bitcoin way outperforms gold. And if you express Bitcoin in ounces per gold, so you see that the value of Bitcoin goes up if you benchmark it compared to gold, meaning that Bitcoin is, again, outperforming gold. So with that track record over the past 15.5 years and institutions looking for ways, options to park their money, Bitcoin is offering a really great investment case for them. And as a result, we could see a very big inflow. Here you see the CEO of Binance, and he's saying Bitcoin gains institutional ground as Richard Teng reaffirms its role as digital gold. So yeah, because Bitcoin has many of the same characteristics as gold, but in many ways a lot better. So here you see all of those next to each other. Fiat currencies are centralized, they're managed by a central bank and a government, and cryptocurrencies are decentralized, meaning that there's no central entity or authority that manages everything. Let's just go over this very quickly, because by now you probably should know this, but crypto is completely transparent. You can see everything on the blockchain, and with fiat currency you can't. There's a lot more privacy with crypto. For example, if I create a wallet and I don't dox that wallet, so I don't KYC it, then it's pseudo-anonymous. Only people that know that that wallet is my wallet will be able to know that. But people who don't. Then I can transact actually anonymously. So fiat currencies can be traced back to the individual. Well, that's not if you're paying with cash. That's also why a lot of drug money is transacted in cash, so physical cash. But if you're wiring money with a bank account, then oftentimes they can figure out who sent the money to who. because when you need to open up a bank account, then you generally need to show your passport. Then the only big downside with crypto is that it's volatile, meaning it can go up and down in value a lot. But if you're looking at it over the longer term trend, then generally Bitcoin tends to perform really well. Money, on the other hand, guarantees, or cash guarantees, to lose value over the long term because of inflation. So I prefer to put my money into something that's volatile over the short term but goes up over the long term than something that's guaranteed to go down both in the short term and long term. So demand for Bitcoin is rising, but the supply side is actually what's making this so interesting, because there's just a hard cap of Bitcoin. And ETFs are buying way more than miners can produce. I showed this in my last video as well. So the orange bars on this chart are how much new Bitcoin is being mined every single day, and the blue lines are how much institutions or how much just the ETFs are buying in terms of Bitcoin. And then we're only talking about ETFs. We're not talking about corporations, publicly traded companies like MicroStrategy, Semler Scientific, and those big dogs which are pumping billions in the market. Those are outside of this chart. So on top of the blue line, you will add their buying pressure as well. And my conclusion is there's just not enough Bitcoin for everyone. So that means we're preparing for a massive supply shock. And that's also the investment thesis of Larry Fink and why he predicted a $700,000 Bitcoin. Yeah, here again you see a breakdown over time of all of these Bitcoin spot ETFs. So the BlackRock spot ETF, Fidelity spot ETF, Grayscale, and over time from like last year until right now, and how much Bitcoin they've acquired. Look, I'm not gonna go and read out this table, but what you should understand is right now these institutions are pumping billions into Bitcoin and they're trying to accumulate as much as possible. So Bitcoin is not a side bet anymore. Bitcoin is becoming the core position of many portfolios, like for example MicroStrategy, 21 Capital, Semler Scientific, MetaPlanet. There's many people, companies and institutions which are right now doubling down on Bitcoin, simply because when they're analyzing the market and they're seeing these supply and demand mechanics playing out, their conclusion is Bitcoin will explode. Now I'm really curious to hear your price prediction in the comments below. So do you believe that a $700,000 Bitcoin is something that is reasonable? Do you believe something else? I'm really curious to hear your thoughts as well. And again, if you enjoyed watching this video, make sure to smash the like button, subscribe to my channel so that you can stay informed about everything that's going on. I'm here to help you to make sure that you're positioned for maximum profits in this bull market cycle and beyond. All right, hey, thanks for watching. Peace out, take care, and I'll see you in the next one.